Let's break down Pi Network and explore what makes it tick. We'll delve into its core concepts and understand its unique approach to cryptocurrency. Maybe you've heard about it, perhaps a friend mentioned it, or you saw an ad online. The promise is simple: mine crypto on your phone for free just by tapping a button daily. It's a low-effort way to potentially get involved in the world of cryptocurrency. Launched in 2019 by Stanford grads, Pi's mission is to make crypto accessible to everyone, breaking down the barriers to entry, not just techies. They aim to empower everyday individuals to participate in the digital economy. All you need is a smartphone and a daily check-in. It's designed to be integrated seamlessly into your daily routine. This simplicity has attracted tens of millions worldwide. It's a testament to the appeal of easy access. Unlike Bitcoin, which needs expensive hardware, Pi is designed for anyone, anywhere. It levels the playing field, regardless of your location or resources. Instead of burning electricity, Pi mining is really about distributing coins to early users. It's a way to reward those who join and contribute to the network early on. The goal? Build a massive, engaged user base before the coin has real-world value. This allows for a more organic and community-driven valuation process. Pi's strategy is all about the network effect. The more people join, the more valuable it could become. This is a fundamental principle behind many successful networks. Right now, Pi is in its enclosed mainnet phase. That means it's not trading on major exchanges like Binance or Coinbase. It's operating within a controlled environment. Users who pass KYC can transfer Pi within the ecosystem and buy goods from other Pi users. This fosters a closed-loop economy within the Pi network. But you can't cash out for dollars or Bitcoin yet. The developers say this is intentional, to build out apps and real utility before opening to the public market. They want to ensure the ecosystem is robust and functional before wider adoption. Pi's user base is its biggest asset and its biggest question mark. The value of Pi hinges on the engagement and activity of its users. If millions get access to their coins at once, it could create a huge decentralized economy, or a massive sell-off. The initial distribution will be a critical moment for Pi. The project's future hinges on whether it can turn this social experiment into a real, valuable currency. It's a test of whether a community-driven approach can succeed. For now, Pi is a bold bet on people, not just technology. It prioritizes user engagement and community building. The world is watching to see if this approach pays off. Will Pi become the next big thing or just another crypto footnote? Only time and the open mainnet will tell. That's the Pi network in a nutshell. It's a project with a unique vision and a lot of potential, but also with significant uncertainties. So, what's Pi worth today? It's a question on many people's minds, especially those who have been mining Pi for a while now. If you check CoinMarketCap, you'll see a price, hovering around $39. But that's not the real deal. It's important to understand what this price actually represents. The price you see is for a Pi IOU, essentially an IOU note for Pi, a placeholder token used for speculation, and it doesn't represent the actual mined Pi that sits within the Pi network. As it stands, you can't deposit your hard-earned mined Pi on these exchanges that list the IOU. You also can't cash out any potential profits from these IOU trades. This IOU market is driven by pure speculation with very little connection to the underlying Pi network. It's characterized by wild price swings, reflecting sentiment rather than true utility, and generally exhibits low trading volume. The real Pi coins, those mined diligently by millions of users, aren't yet in circulation on the open market. The Pi core team's primary focus right now is on the successful launch of the open mainnet. This launch depends on fulfilling three main conditions. First, they need to successfully complete KYC, Know Your Customer verification for millions of users, ensuring compliance and security. Second, they must migrate all verified balances securely to the mainnet blockchain. And third, they aim to foster and build a thriving ecosystem of practical and useful apps. There's no firm date set for the open mainnet launch just yet, but the Pi core team provides regular progress updates to the community. In the meantime, developers are actively encouraged to build apps within the Pi network, including online marketplaces, engaging games, and even local markets where users can begin to spend their Pi. These early use cases offer a glimpse of some real-world utility for Pi. However, the perceived value of Pi in these transactions is often inconsistent and varies widely. For example, one vendor might value Pi at just a few cents per coin, while another might value it at several dollars per Pi. Until the open mainnet officially connects Pi to the wider global economy, there's no truly stable, market-driven price discovery mechanism in place. So the big question remains, will Pi's actual utility and real-world demand be able to match the considerable hype surrounding it when it finally goes live? For now, any price you see is essentially just a bet on the future potential of the Pi network. The real test of Pi's value and sustainability will come when it's finally open and accessible to the entire world. Until that day arrives, it's all largely based on speculation and future expectations. So keep a close watch for the open mainnet launch, because that's the moment when things will truly get real for Pi. Until then, Pi's true and sustainable value remains, for the time being, a bit of a mystery. How does Pi's launch compare to other cryptos? Bitcoin started with a white paper, a tiny group, and real mining. Value grew slowly, based on tech and scarcity. Ethereum launched with an ICO, smart contracts, and a tradable asset from day one. Both built value on technology first, then community. Pi flipped the script, community first, tech and utility later. It's more like Stellar or Helium, which focused on broad distribution and network effects. But Pi's user base dwarfs those projects. The risk? Pi's value is built on a promise, not a working product. Other cryptos had tangible assets or utility early on. Pi's challenge is to turn its massive user base into a real, functioning ecosystem. If it succeeds, it could be a new model for crypto launches. If not, it may be remembered as a social experiment that never delivered. The stakes are high, and the outcome is still uncertain. Let's dive into the numbers. Pi's tokenomics are absolutely crucial for its long-term viability and success. Understanding these mechanics is key to grasping Pi's potential and the challenges it faces. The max supply is capped at 100 billion coins. This figure represents the absolute maximum number of Pi coins that will ever exist. That's huge compared to Bitcoin's limited supply of 21 million. This difference in scale has significant implications for scarcity and potential value. A significant portion, 80 billion Pi, is allocated to the community. This allocation is intended to reward early adopters and foster a strong, engaged user base. The remaining 20 billion is reserved for the core team. That's a big team allocation designed to incentivize ongoing development and maintenance of the Pi network, and the community is watching closely how it's managed, ensuring transparency and accountability in the project's leadership. The real question is, how much Pi will actually circulate at launch? This is a critical factor that will influence the initial price and market dynamics. It depends heavily on how many users successfully pass KYC, Know Your Customer verification, and migrate their Pi to the mainnet. For example, if 30 million users each have an average of 1,000 Pi, that would translate to a staggering 30 billion coins entering the market upon launch. That's a potentially massive supply shock, and the market will need to absorb it effectively. This could potentially lead to a significant crash in the price if not managed carefully. The enclosed mainnet phase is specifically designed to carefully manage this risk and prevent such a scenario. Lockup features allow users to voluntarily lock their Pi for extended periods, which in turn provides them with higher mining rates. This mechanism is crucial for reducing initial selling pressure and promoting market stability. Ultimately, success hinges on how many users choose to lock up a significant portion of their coins, and critically, on how much real-world utility is developed and integrated into the Pi ecosystem before open trading commences. If an overwhelming number of coins flood the market without sufficient demand, the price could plummet dramatically. However, if a substantial amount of Pi is locked up or actively used within the ecosystem, it has a much better chance of holding its value. In the end, the tokenomics will either make or break Pi's future price and overall success. Therefore, all eyes are keenly focused on how the Pi network manages the initial supply and distribution at launch. What could push Pi to $10? Its biggest asset, a massive engaged community over 55 million users. If even a fraction become active in the ecosystem, it could spark real economic activity. The open mainnet launch is another huge catalyst. Listing on major exchanges could bring in new investors and capital. Real-world utility is key. If apps and services make Pi useful, demand will follow. Imagine using Pi for shopping, services, or games. This could drive organic demand. A bull market could amplify the hype, attracting even more attention and investment. The perfect storm: exchange listings, a huge user base, real utility, and a bullish market. If all these align, a price surge is possible. But it all hinges on execution and timing. Without real utility, hype alone won't sustain the price. Pi's future depends on turning users into active participants. That's the real growth driver. The road to $10 is full of obstacles. The biggest massive selling pressure when open mainnet launches. Millions mine Pi for free. Many will want to cash out fast. This could flood the market and crash the price. Utility is another hurdle. The ecosystem is still basic with no killer app. If Pi launches without compelling use cases, faith could evaporate. Regulatory uncertainty looms. Governments may scrutinize Pi's model and KYC process. A negative ruling could block exchange listings or damage reputation. Trust is fragile. Delays or missteps could shatter community confidence. Skeptics already call Pi a scam or empty promise. The core team must deliver, or risk losing everything. The burden of proof is on them. Success is far from guaranteed. Pi's community is deeply divided. True believers, pioneers are everywhere, sharing stories, trading goods, and hyping Pi's future. For them, Pi is a movement, not just a coin. Businesses accept Pi, Telegram and Discord groups buzz with activity. This grassroots energy keeps engagement high and fuels optimism. On the flip side, skeptics are just as loud. Many crypto veterans see Pi as hype with no substance. No real mining, no product, just a counter. They warn newcomers and question Pi's purpose. This split sentiment creates volatility and uncertainty. Influential critics make it harder for Pi to attract serious developers and investors. The IOU price is debated. Believers see hope, skeptics see empty speculation. When open mainnet launches, expect a fierce battle between bulls and bears. Sentiment will drive the early price swings. Let's look at the data. Pi's user growth is explosive, over 55 million in 5 years, mostly through referrals. This huge base is both an asset and a supply risk. The IOU price chart shows wild speculation, spikes, crashes, and thin trading volume. It's a sentiment gauge, not a real valuation. The key metric, KYC and mainnet migration rates. Millions have passed KYC, but the ratio to total users matters. High migration means strong commitment, low means less supply, which could help price. App development and transaction volume in the enclosed mainnet are growing but still small. Thousands of daily transactions aren't enough for a multi-billion-dollar valuation. For Pi to hit $10, on-chain activity must explode. Real utility, not just speculation, will determine Pi's fate. The numbers tell a story of potential, but also huge challenges. So, can Pi hit $10 by December 28, 2025? The odds are slim. Yes, Pi has a massive user base and hype, and a big launch could spark a short-term price spike. But with tens of billions of coins, a $10 price means a market cap rivaling Bitcoin and Ethereum without the proven utility. Massive selling pressure is likely to drive the price down fast. For Pi to sustain $10, everything must go perfectly. Flawless launch, huge lockups, killer apps, and explosive demand, all in 6 months. That's a tall order. Most likely, open mainnet will bring volatility, a brief pump, then a drop to a much lower price. $10 remains a hope, not a realistic expectation. Pi's experiment is fascinating, but the fundamentals aren't there, yet. The real story will unfold when the world finally gets its hands on real tradable Pi.